Yeah, Aisha, also valuations in a sense is something which will always be a concern here. And the massive expansion which has happened in the entire uh, healthcare space, I think is just huge. I mean, the huge is the real word. So you got two or three things which have happened. Big chains are expanding their footprint. B, small PE-backed hospitals are looking at a huge change in terms of their presence in tier 2 and tier 3 cities. And C, there are a lot of family-run specialty hospitals now, which in a sense are also really looking at expansion. So you got the Apollo and the Fortis, which are national chains, which are expanding. You've got family-backed hospitals, for example, which really could be Shalby, Medanta, NH. They are looking at increasing their presence in tier 1, tier 2. And then you've got P-back hospitals, which is where I guess action in terms of expansion has already started. That would include, let's say, CARE, which is backed by Blackstone, or you have Aster DM, which is backed by P investors. So very interesting times in the entire healthcare industry. This is an industry which again is dominated by capex. It periodically requires a lot of capex, and the growth in a sense is something which is not that strong, which can justify this kind of an uptick. Apollo Hospital has been a performing stock. The P multiples are, I'm not getting a P multiple, but EV per EBITDA I think is 50 times. So that in a sense really becomes a restrictive factor for Apollo Hospital, purely because of the sector and purely because of valuations.